Greetings from the Charter School office. I am Albert Bertram, the finance specialist for the office. So this sheet in front of you is a review of the audited financial statements. It essentially takes the audit and summarizes it into 4 pages and does a couple other calculations. So I'll go through everything with you and let you know what's going on. In the past, we've done regional board training, so we've asked the board members to come to a regional location, and then we've kind of talked about this stuff on a broad perspective. So I know Oakside's a new school, but in the past that's what we did. So this is our first time actually bringing videos directly to the board. So with your specific school data, in the past we weren't able to talk about a specific school, so we're able to do that with this method. So we hope you enjoy it. This document is communication between myself and others in the office, so it helps me communicate what I find in the audits to others in the office, and it's easier to compare from year to year. So if you are looking at this sheet, you can compare 4 pages year to year a lot easier than it could be compared from a large audit. So that's why we created it, and that's why we're bringing it to you. So starting out, we'll start over here in the statement of net position. So this is directly derived from an area on the audit. So to show you that, we'll look at total assets, which is $819,115. So we'll go to the audit. So here's statement of net position. So you can see all the assets over here, and then total assets is $819,115. So I won't go through all the numbers. You can kind of look at that if you want to verify all the numbers. So go back to our sheet. So these numbers should match up to those numbers. This is the first audit for the academy, so there's no previous net position, so that would have been the June 30th, 2013 net position. So the ending net position is the June 30th, 2014 net position, so that's what we would have been looking at right there. So so it's important to know that net position is just the difference between total assets and total liabilities. So if it's trending upward, you're getting more assets. If it's trending downward, you're getting more liabilities. So that's what that is. Balance sheet, current assets. This should say general fund current assets. So these are going to be the general fund current assets on the balance sheet, and then over here is the general fund classifications on the balance sheet. So I'll go back to the audit to show you what I'm talking about with these. So the balance sheet is 2 pages after the statement of net position. So 1, 2. Here's where it says balance sheet. So I said general fund because it's important to note that these are from the general fund column. So the school service fund is a separate fund, so it's important to just look in the general fund. So here's our assets right here, and if we scroll down, we'll see our committed and our unassigned fund balance classifications down here. So we'll go back to the sheet. So here's those assets again, and then over here, here's our fund balance classification. So if you don't know what these are, these definitions are directly in the audit. I'll read you the 2 that you have. So committed amounts are amounts constrained to specific purposes by the board. To be reported as committed amounts cannot be used for any other purpose unless the board takes action to remove or change the constraint. So that's what a committed fund balance means. Now unassigned means amounts that are available for any purpose. These amounts are reported only in the general fund. So unassigned is kind of the free reign funds, and then committed is a special purpose. So if you want to know what these are, you can go back into the audit and look them up again. They should be expressly listed in every audit. So we'll go up. This is a breakdown of the activity during the year. So the beginning fund balance is 0, first audit. Revenues, total expenditures, other financing sources, net change, and then ending general fund balance. So below that we have so this is a good snapshot of the activity during the year. And below that we have a couple calculations. Now we know the NHA agreement's in place, so we do take that in consideration, but I still want to explain everything here that's on this sheet. So general fund divided by revenues is the ending general fund divided by total revenues, and then general fund minus restricted is essentially the same calculation, except it would subtract a restricted amount down here if there was a restricted amount. So since there isn't, that's why these 2 are the same. General fund divided by expenditures is the ending general fund divided by total expenditures. This one is one that the governor proposed on his budget associated with his budget. So that's an important one. We like to look at the revenues more because the general fund over revenues, because if there's a large capital outlay during a specific year, that could potentially skew this ratio. So it's important to look at both of them and compare and try to understand what's going on with them. If they're trending upwards, then the general fund's growing in proportion to what's going on with the expenditures or revenues. So this one, you'll notice this error, divide by 0. This is saying you cannot divide by 0 since the beginning general fund balance was 0. That's a mathematical error, so don't be alarmed. That's what's going on. When there's next year, when there's no 0 in the fund balance, that won't happen. So this one just takes the ending general fund balance and divides it by the beginning general fund balance. And if it's above or below 100%, it will tell you if there's a positive or negative net change. But you can also see the positive or negative net change right here. So that's what that is. So move down to this section. So our notes payable long-term debt. So these 4 boxes are a summary of the notes section of the audit, which the notes are also included on page 4 of this sheet. So this is kind of a numeric display of that data. So for other schools, this would be associated with a state aid note or a short-term borrowing. This would be associated with a revenue bond or some sort of long-term debt associated with building financing. Usually it's a bond. Over here, this is instead of using the bond to finance a school, the NHA schools utilized leasing. So this is the lease associated with the building. So that's what that is. And then over here, this is the management fees. Normally, if whatever is expressly stated in the management fees section of the audit, I put that total here, and then put if they had a management contribution or amount waived. I put NA because the agreement with NHA says they take all revenues, and there's not an express number listed on the audit. So though there is a management fee, it's not expressly stated, and that's why that's like that. So now for management contribution, I could have put an amount here, but I'll show you that on the next page. So we'll talk about that. So I didn't put it here because that would be kind of misleading when it says NA up here and then have an amount of management contribution down here. So we'll get into that on the next page though. So down here, this is the square footage that we have on record. If this is different than 50,000, let us know. These are all formulas, so everything will automatically fix after that's changed. So utilizing that 50,000 square footage, we did a couple calculations. Here's the revenues per square foot, the expenditures per square foot, the difference. So it's important to look at these from year to year and see if the revenues and expenses are going up from year to year. So, and then below that, payment per square foot. So this is this takes the total lease payment during the year and then divides by the square footage. $15. The average for the Bay Middle schools is $14, so that's pretty close to the average. Over here, this takes the line item of operations and maintenance and divides by the square footage. So I'll scroll down the next page. Here's operations and maintenance. So that's what that is. $25. I believe the average is $18 for BMCC schools. So it's a little bit above average, but the payment per square foot was around average. So total square footage divided by fall 2013 is the just takes the building square footage and divides it by the fall 2013 count. So that's just something to look at, consider, and compare from year to year. And then we'll move on to the next page. So the next page is the general fund comparison. Now normally there would be the June 30th 2013 amounts over here and then the 2014 amounts, and it would make it pretty easy to compare from year to year. That's not the case because this is the first audit, but next year when the sheet comes out, you'll be able to compare from year to year. So this is the point I wanted to make. So private sources NHA $1.5 million. This is the revenue column. So I listed down in the notes section. I'll buzz down there real quick. So this is directly from the audit. This says revenues private sources NHA represents a contribution granted by NHA for excess of academy expenditures over public revenues available. So when I said on page 1 that I could have probably put something up here that said management contribution, I probably could have listed that amount. I didn't because there wasn't a management fee expressly stated. So just know that I could have put that up there, but I didn't because of that. I didn't want it to be confusing. but know what this is and know that this is a contribution from NHA. So usually that's how it works with the NHA schools. They contribute up front to get the school growing and mature, basically. So you'll notice here's the revenues, here's the expenditures. Now, if you don't know what any of these are these individual line items. It's important to know what these are from a board perspective. So I'll show you a little trick that I've done to figure things out pretty fast. And if you don't know what these codes are too, these are accounting codes to differentiate things in the accounting system. So I went and got the accounting manual and I put it in Microsoft Word, and then you come up to the top right hand corner. This is I believe Word 2013, and then find, or you can hold Control and push F. Find, and then come over to the navigation bar, type in what you're looking for, make sure you're on results, and then this will skim through this document and find what you're looking for. So if we want to know what basic programs are, we could see the accounting code number right here, 110. And then basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. Includes pre-kindergarten. And it goes on. I'm not going to continue reading to you, but if you wanted to go down and read other things, there's all these other codes within that 11X amount are down here. So it's just a good tool. If you can find things pretty quickly. Now you can't come in and type like instruction because it's in here way too many times, but if you have a focused search, you can find things pretty well in here. So that's that. I'll go back to the sheet. So there's not a whole lot to compare from year. There's nothing to compare from year to year, so there's not much to talk about here. You could look at your individual line items and say what's going on with them or whatever. We're not going to do that for time. So here's your ending general fund balance. This should match up to that box in the upper right hand corner, page 1. Below that we have our budgetary comparison. So this takes the original, final, and actual listed on the audit, and then again we have a divide by zero error because these are zeros. So the budget difference is the difference between the actual and the final, which matches up to this and 0. So that's what that is. Now below this is the instruction percent of revenues. This is a calculation, a proportional calculation. Will go up. So this takes total instruction divides by total revenue. So we'll go up for a moment. So here's the total instruction cost divided by total revenues. So from year to year, you can kind of see a trend in this. Now, just know that next year if this contribution changes, that's going to impact this ratio. Just know it's proportional. There's other things that can affect it. It's not absolute. It's meant to just ask a question, not meant to be like, why is this going down? It shouldn't. I'll give you an example. If a teacher that's getting paid $50,000 resigns or retires, whatever, and he or she is replaced by another teacher that only gets paid $30,000 starting out, that instructional expenditure is going to go down while not providing less instruction at the school level. So we won't get into quality because we'll say someone may argue, well, the quality is going to go down. Well, we're not going to get into that. This is just the financial analysis. So that's what this as this trend builds during the year. Usually I had 3 years for all the other schools, but I only put 2 because there's not even 2. So just look at this number as an indicator, understand what the relationship is, and then you can kind of see a trend over the years and ask good questions related to it. So over here is the revenues for June 30, 2014 divided by the fall 2013 count. So the total revenues and total expenditures per student at that fall 2013 count. And then the difference. Again, if there's a large capital outlay, look for this one to be potentially skewed. So go down to the next page, which is the enrollment numbers. A lot of zeros here, new school. These 2 counts are derived from CEPI, which I'll show you what CEPI is. I don't like to use acronyms without explaining what they are. So CEPI stands for the Center for Educational Performance and Information. Now if you come down to My School Data, you can go through a couple filters and then pick what you're looking for. If you're looking for a student count, here's student count, free reduced lunch count, special education enrollment, whatever. And then on student count, you can come down and there's these really large spreadsheets. They go down all the way down to 91, 92. So these spreadsheets have a lot of data in there. So I've dug that data out for you. So that's where that's from. The last one is an unaudited number I received via Epicenter, which Epicenter is the file retrieval system that lets us receive the charter school office receive files from the school. So that's what epicenter is. If you ever hear that, you don't know what that is. So, and then over here is just a graphical, or excuse me, a numeric display of the data, so a percent change from count to count. And again, these are divide by zero errors, so you can't divide by zero. Here's all these zeros. So, so below that we have a graphical display of the data, so you can see the count numbers that are up here, just displayed down here for visual people. And then below that, free and reduced lunch counts. There's only one because it's a new school. Oakside's a new school, excuse me. And then here's the percent free and reduced lunch. So this takes the 397 and divides it by the corresponding fall count up here. So that's what that does, and then puts it in a percentage. And then below that, there's a graphical display of the count data. So as you get more years under your belt, you'll have actual data here instead of zero. So it'll be more beneficial then, but still the same template. So that's why there's zeros in there. So as we scroll down to page 4, this is the notes section of this sheet, and these notes are derived from the audit. So when I have page numbers listed here, page 7, page 16, this is directly from the audit. So if you wanted to go verify that this is from the audit, you could go verify that this is from the audit. So, so this is the debt information, so the capital assets, and then the operating lease. So anything associated with debt, that could have any debt implications. And then management company notes. This is the management company information. And then I've already gone over this revenues, private sources, NHA from page 12. So if you want to look up any of that, you can look that up. There's no findings, which is good. And down here, BMCC notes is essentially anything that's not debt or management company related. So there's a couple notes here from page 6, and then that the charter expires in 2021. And then I put that this is the first audit for the school. So this information is reviewed by Mariah Wannick in our office, and my contact information is albertb@bmcc.edu. If you have any questions, comments, concerns, let me know, or you can talk to your field rep and we'll get it straightened out. Hope you enjoyed the video, and thanks for all you do for the children of Michigan. Have a good one. Take care.